All right, welcome in everyone. Today is episode 16 of the Ninja Wealth Exchange podcast. Today we have a special guest, Tou Fang, real estate investor. We're gonna be chatting with Tou. So it's kind of like going around in circles here. I was once a guest on Tou's podcast a few years ago, and now he's on our show. So, Tou, welcome to the show. How are you doing?
I'm good, man. Good to see you, Laura and Johnny. And like I said to you earlier, I'm very glad that you guys are pushing out content for our community here. So thanks for doing that. But I'm doing good, man. And thanks for having me.
Yeah, definitely. So tonight, Johnny and I are just going to have a conversation with Tou, right, to learn a little bit more about Tou and his journey in real estate investing, building his wealth. So I've heard he has accumulated over $1 million net worth, right? So a lot of people, of course, they only see the success, right? They only see the results, but they don't actually know the work that went into it behind the scenes, right? So that's what we're here to do today, to learn about how did Tou get there, right? What was his journey like? So let's start. Let's rewind. Get back to the beginning here with Tou. Tou, where are you from?
Where am I from? No, I'm kidding. So I used to live, I mean, obviously, I was born in refugee camp in Thailand because of the war and stuff like that. And so we're actually one of the very last group that moved to the US. And so that was at 94 when they closed the camp down. Then the family, we moved to San Diego because we already have family members down there. So that's around 9 years old. I was down there. I pretty much stayed down in San Diego, went to UC San Diego down there. I studied math, computer science down at UC San Diego. Then after that, I just worked for UC San Diego doing IT stuff. So that's what I was doing for 20. I mean, I was down there. I did IT for about 12 years down there before I moved to St. Paul, Minnesota here. I think we
Wow.
moved, it's almost 10 years now. I think we moved 2017 when we moved
All
over
right.
here.
Wow, I didn't know you were from San Diego. So I gotta
Yeah.
ask, why would you leave such a nice place to come to Minnesota right now when it's like 0 degrees?
I remember when I was down in San Diego, we used to drive like 2.5 hours to White Bear Mountains to touch a glimpse of snow. So, so we want the snow. Nah, it's really cold. It's too cold over here. Uh, no, I got married. I married pretty late, so I married when I was 30, and so my wife and I just needed to figure out a way to raise our family. We're going to start a family. There's
Okay.
not a lot of people down there
Mhm.
and we wanted to raise our kids with Hmong people as a community. And then on top of that, it's super expensive in San Diego. So it's
Mhm.
very hard for like someone like me and my wife that is new that are newly married at that time to start a family in San Diego.
Right.
Typical two beds, 3 bed, 2 bath homes are like upper of like these are like trash homes, by the way, in San Diego. They're dirty, yeah, trashy homes. They're going for like 800 plus already.
Man,
And
that's
so,
crazy.
yeah, so with my tech salary, I can't afford to stay there.
Mm,
My wife, she just moved from Laos in 2012 to the US, so she doesn't have a professional degree to do
mhm.
professional work either. So it'll be very, very difficult. And so that's why we decided to look elsewhere. And we were fortunate enough that my wife met some of our family members. She used to sell clothes, bulk clothes. So then obviously Minnesota, it's good for that. And so after looking around, we were looking at Texas, Oklahoma, Florida, a bunch of places, but it turned out that Minnesota it's better for us and for what we wanted to do. So that's why we moved up here to raise our family.
Got it. Okay. So you had a pretty successful career yourself. You went to college. got an IT background, IT degree, working in IT for a while.
Mhm.
What made you switch over to real estate? How did that enter your life?
Well, I wouldn't call my IT career successful. So, but I guess it's whatever it is. I think I never felt like I fit it, into that career path or just that sort of environment. I always feel like something's off, and so I always been searching, to do something. And it turned out like my wife already, when I met my wife, she already had her clothing company. So she was already running her own business and everything like that. I was
Mhm.
just very scared, right? Like I wanted to do something else. I feel like I don't belong in that tech world, that sort of corporate structure, and I
Mhm.
always been searching, and I'm like, so in tech, I have my own team. I have like 5 people that work under me, so they do most of the work. And I'm always like, oh, while I'm free, I could look at different projects and things like that. And obviously, some of those projects could be real estate projects. So I always been researching all that time, but I just never jumped into it until I married my wife, and she just has a different mentality. She's been doing her own businesses, so she's like, you gotta jump. And so that's when, if you guys see any of the discussion we had in the past, she kind of forced me to move to Minnesota because she's like, if you don't go, I'm leaving. So we married for 2 years, and she's like, if you don't go, I'm leaving. So you either come or like, And the funny thing is that I have family in Minnesota. She has nobody up here, you
Mm.
know. And so yeah, I kind of got forced into it. Um, but yeah, honestly, the truth is, I never felt like I belong in that sort of corporate structure, and so I always been searching for something to do.
So it sounds like the saying that goes, behind a strong man, there's a stronger woman, right? Like,
Oh, oh yeah, definitely. If it wasn't for my wife, yeah, I
very cool.
wouldn't. Because I had different girlfriends through the time. If one of the girls that I dated in the past like would have like took it this route, I probably would have married her, right?
Hmm.
Because I did not, I had this feeling that I don't belong in that structure, that sort of
Hmm.
corporate structure. And so if I met someone else that could have shifted, like pushed me to the deep end, it would have been different. But it got to where I'm 30, like I think 32 when we actually kind of start everything. And so
Yeah,
I think also I met it took me a long time, but I think it's a maturity level that I had to
mhm.
reach as well, in order to kind of do this also.
That's true. That's true. So, like, when you were thinking about, real estate, were you looking at other things? Like, there's so many things that we as like entrepreneurs, as well as we that, like to do business and stuff like that. We look at so many different things, right? Like,
Yeah,
like I'm in multiple things, right? I'm in mortgage, I'm in real estate, I do some investing myself, and then on top of that, I do my pastor work, right?
yeah.
So like I'm doing tons of different things. Like, how did you choose specifically real estate over like possible other choices that you might have seen?
Well, I tried other things. I always been trying different things. So, but one of the big thing was stock trading. I had one of my childhood buddy. We grew up together, and he did tech as well. He's a software engineer, and he started trading when we were in high school already. And so he's very successful in terms of trades. Um, and I tried, right? I tried to follow what he's doing, but I don't think I have the temperament for it. I'm kind of
Mhm.
like the guys where like he'll trade and then he has his loss for the day and then he's good, right? Or he'll get enough gains, then he's like, all right, I'm done for the day, right? I don't have that temperament. So if I have a loss, I will try to chase that loss. If I have a gain, I'm trying to maximize the gain. So I'm kind of like an all-in guy, and
Mhm.
so in real estate, that I think that works for me because I could like put it all in, but my investment is protected with that actual real property. So as
Yeah.
long as we buy it right, I know that I will not lose money, and even if I gain just a little bit, the principal is still protected, right?
Mhm.
Versus other things like, my buddy, he's very successful in stocks, but I just couldn't do that. I don't have that temperament. And so, yeah, it works for me. I'm an all-in guy, and I think for real estate, it works because you have that real asset that's protecting your principal, you know?
Nice. Okay.
Yeah.
So that's why you chose real estate. That probably worked out better for you. Like,
Yeah.
my that's my experience too, right? Like with stocks, I've lost tons of money in stocks.
Yeah.
But I've never lost money in real estate. Like in everything that I do when it comes around to real estate, the numbers, like as long as you crunch the numbers and you look at your stuff and you do it, it turns out really good. So was there any books that you read that really, really motivated you to move towards real estate?
Oh, yeah, tons of books, right? So, I mean, for better or worse, a long time ago, this is not a real estate book, but obviously Rich Dad Poor Dad. For better or worse, I know there's a bunch of controversy around that, but it just gets like that book really got me to start really thinking about, like how can we resolve certain things, right? So if I don't have money to buy real estate, how can I find that money, right? So just a fact of like re changing your perspective or reframing how you resolve issues. Like if I don't have money, how can I get the money? If I need to buy that deal, how can I get it? Instead of saying, oh, I can't do it because I don't have money. It's like, how
Mm,
can I find money? Okay, I could partner up or things like that. So I think that
yeah.
was influential early on. The real estate specific, I like the Brandon Turner book.
Okay.
I think it's How to Buy Real Estate with Little or No Money Down.
Nice.
Like
Okay.
that book, I'm really slow. So that's also the reason I do real estate because I'm slow. So real estate
You're
just
not
gives you,
slow. There's no way. I've known
uh,
you for a little while. You're not slow.
but like stocks, you're there's such frequency. Like you're trading. But real estate, even if I push everything, we're looking at 3 months, right? At least, right?
I
Unless
see.
you're
I see.
wholesaling, but it's slower. It's slower, I guess. But yeah, that book by Brandon Turner, Think Buy Real Estate with Little or No Money Down. Um, it really, like I said, I'm really slow, so I bought the book, but I bought the audio version, and I think the audio is free on YouTube now. You guys could just look it up. Uh, and I would like everywhere I go for walks and stuff like that. I'll just listen to it. So I probably listen to it like 30, 40 times to
Wow.
really, yeah, like I said, I'm really slow. So to really understood like all the different creative strategies that he put in there, because I don't have money, so how do I get started? He talked about house hacking in there. He talked about how he partnered up with someone to buy a triplex together, right? Because he didn't have money, I didn't have money, so how you do that, lease option, that are in there. So all of those strategies that are in there, like in real estate, you need to use all those strategies, right? And so,
Yeah.
yeah, that
Agreed.
entire thing was just very influential in me starting and giving me the confidence to start, right? Because if I listen to it like 30, 40 times, I know the book like the back of my hand. So then if a deal comes through, I could say, oh, okay, I think we could kind of use that strategy. And that gave me the confidence to get started. So those are the few books, but I'm still listening books all the time. You have to continue your learning, right? All the
Yep.
Grant Cardone books. Right now, I'm really into Alex Hormozy, because I'm beginning to mature more as a business owner instead of just the real estate side. And so, yeah, you have to just constantly learn.
Nice. Nice. And you have like talking about Alex Hormozy, you have a school network, right?
Yes, yeah, yeah.
Yeah. Do
So
you
we
want
have
to tell us
about
a little bit about
100.
that?
Oh, yeah, yeah. So I needed to, obviously, I created the Hmong Will Builders platform for all of us to kind of get together and, thank both of you guys for jumping on our shows when we did that in the past. I
Mhm.
had both of you guys on there. Um,
Yep.
and I needed a place to kind of store all the videos that we did, all the content, all the trainings that we provide, because we had a conference a few years back as well.
Yep.
And so I try other platforms, like Kajabi and teachers, like but those are very hard. They're not really community based.
I
Um,
see.
and then Facebook doesn't allow you to really host the video. They don't really host the video properly. And
I see.
it came out that yeah, school.com, SKOOL.com, came out, and um, I knew about it, but I jumped on when Alex purchased minority share of school as well, right? So if you
Got
guys
it.
don't know, Alex is a minority shareholder or minority owner of school.com. And so, just jumping on, I tried it. It's very simple. I was able to host all the video content and everything like that on there. So yeah, we have a community of around 100 that they pay, every month to be part of that community.
Nice.
And yeah, so I have everything I do is hosted on there. All my contracts, all my rental contracts, all my lease option contracts, all the projects that I do, we just post it on there. So,
Wow.
because you guys know this too, if it's public, sometimes I can't share the actual deal, because
Right.
like I want to talk about the actual deal. They have like private information on there.
Right. Right.
School here, when I meet with like the group, we try to meet every Monday. Uh, and so when I meet with the group, we're actually going through the actual deal, like, and so we're looking at the details of people's names, how to, all of that stuff. So all of those are hosted on the school page. That's for the membership stuff. And then obviously we have all the free stuff that, we put out on our YouTube channel. So those are the free stuff.
All right. Very cool. Very cool. And I'm in the school, in your school system, and I've been on a couple of the calls. Yeah, and you guys walk through the deals pretty strategically, and you guys walk through the deals like like with a fine through comb, like, and talk about the specific partners that's all involved. And so yeah, I can see why you need that community to make sure that all the information is disclosed within just the community so that you can actually make those deals happen, right? So that's super cool.
And
um
I did or and so I done deals with some of the people, the members in there, but I'm also very happy that some of the members they're doing deals together. And so
yeah,
I
that's
like
awesome.
that, they're in there, they're finding partners. I know one of the members, they don't even know he owns a bunch of he's a good buddy of mine. But obviously he doesn't like say, hey, I got a lot of money. But I tell the other members, I'm like, dude, this guy has a lot of money. You guys just find the deal. He'll fund it.
Nice.
So he's doing a deal now with one of the members in there. I'm like, yeah, see, you guys don't need money. This guy has the money already. You know.
That's
So
so cool. That's so cool. So,
yeah,
and we'll give more information on that a little later,
yeah.
so that if anybody wants to join, they can join. But so moving on, right? So, like, did real estate solve a problem for you? Like, did it really help you with maybe your life or with your career path, or did it um, is it something that changed your life?
Oh yeah, yeah, definitely. Um, so like I said, I don't know how my IT career was, but I'm not the type that hate my job either. So it's not like, oh, I hate my job. I just feel like I could have done something more. I just felt something was
Mhm.
missing. And so I actually did real estate. We actually got like 10 rentals before I quit my job because it was just
Nice.
yeah, we had 10 rentals that I was still managing, and we still have like two, three rehab going on at the same time at that time. And so it would just become way too stressful for me to
Mhm.
do. Um, and then that's when I left, right? Um, and the main thing, I think, aside from just like financial stuff, um, I like my freedom. Like, so this is what I love. It's stupid. It's gonna be dumb, but um, I like going to Costco on Wednesdays. So Wednesday is my day off with the family, right?
Okay.
So like, take Wednesday, nobody's at Costco. It's me and my family. We do whatever we want there. You know,
Nice.
so
Eat all the
so
free samples.
yeah, yeah, exactly. So nobody's bothering us. We do whatever we want, right? And so like I like that. I like that ability to just take Wednesdays off with my family and
Mhm.
go to places and like you know and nobody's there, right?
No,
Like
that's awesome.
tomorrow, yeah. So I like stuff like that. Like I think that really changed my life. I
Nice.
like that my daughter goes to school at 9, 10 in the morning. So I shift my schedules around my daughter's schedule, So, I wake up like around 8, sometimes 7:30, but around 8, kind of spend time with my daughter. She's a first grader, so, prep, get food for her, stuff like that. And then I take her to school at 9:30 or 9:10 every single morning, right? And then, so I like spending that time. And then I'll go after that. I'll start my day at around 9:30, 10 o'clock. Look at all my projects, run around, everything like that. And then at 3:45, I come back and I pick up my daughter, right? So I spend a few hours with her and the family, and then I start my day again, and at around 5 o'clock, right?
Okay.
So after 5 to like around 10 o'clock, that's when I do sort of like the second wave of my work. So,
Okay.
I think that flexibility I really appreciate. And I think that totally changed my life instead of like like, and so it's just that flexibility. I think regardless of what you do, whether you do real estate, you become very good at your profession, whatever career you want to build, like you have to work and you need
Hmm.
to work really hard. But I think for real estate, it just allowed me that flexibility, and I
Nice.
think that's a game changer. That's life changing for me. Yeah,
Yeah, flexibility, and it sounds like a little bit of freedom, right? Like you
yeah,
get the ability to choose kind of what you want to do. Like on Wednesdays, right? You get to go to
yeah,
Costco's if that's what you want to do. Now, if you don't want to go, then you go do something else, right? But
yeah.
it gives you that flexibility and that freedom. That's super cool. So
I
let's
remember. I remember one time we took the family. Oh, we're gonna take the family vacation this Monday, Tuesday, and Wednesday too. I love
I,
taking vacations on weekdays. Like nobody's there. Like we took a
I agree.
vacation. Yeah. So we went to Wisconsin Dells, on a weekday, and so it's
Nice.
like go on the rides, we just come back, no one's in line. Go on the rides, just come back, no one's in line. So it's
Nice.
like that. I enjoyed those stuff, you know.
That's so
Yeah,
good, man. That's so good. So, all right. So let's jump into the first deal, right? Like
yeah,
we talked a little bit about, how you got there, going transitioning from, one career to another. Um, so tell us about your first deal. Like, how
yeah,
did you get, like, I take it you were still working your IT job
yeah,
and you jumped into your first deal. First of all, what made you jump, right? What made you take the leap? And then after you took it, what did the deal look like? And
yeah,
how did you think it went?
yeah. Um, so when I moved over here, my brother and my brother-in-law, they were looking for places to move to. We were all in San Diego. And he was a plumber. So he came to Minnesota. I didn't even come to Minnesota. He came to Minnesota, and he went to talk to the union, and they're like, "All right, you come next week, we guarantee you a job, right? But if,
Mm,
if it's past next week, we don't know." So then when he came back home, I think this was on a Sunday, and he's like, "All right, guys, I gotta go to Minnesota this Wednesday because if I don't, I'm not guaranteed a job, so I gotta go." And so then on Monday, I told my boss, "Hey, I'm leaving. I'm moving to Minnesota." So I gave my boss like 2 day notice,
Wow.
and
wow.
yeah, and so because of that, then my boss said, "I can't replace you. We have a bunch of reports that needs to be done. You still have your 5 staff that are working for you. So can you like remotely work while we get all this situated?" And so I agreed. Um, but because I was off site, this is before working off site was cool.
Yeah.
Um, I think I think if we would have done it right now, I think she would have just let me work like
Mhm.
remotely forever. But this is before working remote was cool. So because of that, then they reduced my hours. Instead of 40, I'm at 30 hours, because of the situation.
Mhm.
So because of that, then I can't even get a loan.
Mm.
So
Oh, okay.
because I was rushing, I didn't know this at that time. And
Right,
so
right.
because I wasn't working full time, I got reduced hours.
Yep.
I I couldn't get a loan. So and then my wife, she just started working too. So we couldn't get loans. So I had to be very creative about what to do. And when I moved here, I went to stay with my older brother. I stayed at his house.
Okay.
But you can't stay at family's house forever, you know.
Right.
Um,
Right.
and so after a few months, me and my wife, we need a place to move to, right? So just out of necessity, essentially. So I started looking around, I was helping my brother. He does real estate too, my oldest brother. Uh, and so at that time, I have zero, remember, I'm from IT, so I have zero construction background.
Right.
I don't own any tools. Like I'm not like the Hmong guys that, yeah, kuchea, I don't like to fix any of that. So I have zero tools, okay?
Yep.
So yeah, but I knew that, okay, if we're gonna do it, I might as well learn as much as I can. So when my brother was fixing his rentals, right after I get off work, remotely, I'll just see where he's at, and then I'll just go do the work with him, you know. So
Oh, okay.
like yeah, and that's how I started learning. Like I didn't even know what sheetrock was. Like because he was like, "Oh, we gotta go get some sheetrock," and I'm like, "Why are we getting a sheet of rocks for?" You know, like I thought it's really a sheet of rocks. Sheetrock
Yeah.
is a drywall, guys. I didn't know
Right.
that. Right? So it's stuff like that I had to learn. I remember like when he cut the 2x4s and like to frame, and then Nuchituna, right? Or like it's off by a little bit. And to me, I'm like, oh, I gotta cut a brand new 2x4 now, you know?
Mhm.
But it's not. You just get another piece connected because it's not load bearing, right? And so
Right.
like stuff like this that I get to see. Um, but yeah, back to the first deal. Because of that, then I started looking at, all his friends' stuff. I started letting them know that, hey, I need to move out anyway. So, what should I do? And so he told me, hey, you should buy a duplex, triplex, or fourplex. Essentially, house hack, right?
Mhm. Mhm.
So you live in one unit, use the other units to pay for it. The problem is I can't buy it because I don't qualify for a loan. So So I got the idea from him and listening to Brandon Turner and his books, obviously. Um, and then I found a fourplex that the owner travels, right? Well, there
Okay.
was a fourplex that was on the market. I went to talk to the owner. The owner travels, right? Like he travels to Laos and they travel to Laos and stuff. And so they don't really want to manage it anymore. I
Mhm.
talked to them about the rents. The rents were under market, right? They were renting 2 bedrooms for like 750, 800, right? So I was like, oh, hey, we could probably rent rent for hire.
Yeah.
Uh, and then he didn't want to manage it. He put on the market, and then it didn't sell because right?
Mhm.
So
Mhm.
they couldn't sell it. Then they took it off market, and then I talked to the owner. I was like, hey, if you don't mind, why don't like I take care of the property for you, you know? So that's sort of the first deal. So I'm like,
Nice.
hey, let me take over the property and give me some time. Give me 3 years because I need to stabilize my job. So give me 3 years and then I'll like buy the property off of you. You know. And so
Nice.
I talked to him and he's like, oh yeah, we could do that. You take the property. I'll sign a contract with you. In 3 years, you just need to be able to buy it off of me. Um, but give me $20,000 down, right? And then I told him this is a fourplex. I don't have 25 grand. I have seven because I was stupid in my 20s. I didn't save any
Right.
money because no one
I
taught
think
me,
that's all
right?
of us.
So I had 7 grand, and then so like why don't I need a place to stay anyway? So why don't we do 5,000? Can I give you 5,000? And they're like, well, yeah, we could do 5,000, but that means the monthly rent is gonna be more. So you'll pay us the full, like I think 2450 instead of 23, right? Yeah,
Okay.
initially asked for 23. Yeah, so I get the $5,000 down and pay 2450 a month. Each of the other units were renting for 800 each already. So I
Okay.
stay with units, and yeah, so we signed a 3-year contract. So And then we end up decided to purchase that in the contract. We end up to set the price at 250, right? So it'll be 250 for the if we were to purchase it,
Mhm.
$5,000 down for the fee, and then 2450 per month, and then I take care of the whole property. So essentially, that was my first deal.
Nice.
So if you guys don't know, those of you guys, I know you two know, but those of you guys that are listening, that's a lease option contract that
Mhm.
we structured with $5,000 a contract fee, essentially, right?
Yeah.
Um, so yeah, that was the first deal because I couldn't get a loan, and I only have 7,000. So we used 5,000 down. We used 5,000 to kind of paint and fix the property and stuff like that. And I didn't have money to pay people, so I was just on YouTube, like looking how to fix houses and everything like that, you know. But yeah, that's the first deal, and we still have that property.
Nice.
Nice.
Yeah,
Nice.
it's renting for a lot more now. So
I hope
I
so.
bet. I bet.
I hope so. All right. So that was your first deal. And you said you had like about 10 before you decided to step away from your job.
yeah.
Um, at what point were you like, oh man, I'm actually starting to build pretty significant wealth here? What point did you realize that?
Well, I didn't actually realize that at all until Chai did his conference, and uh, and then that's when Chai's like, hey, maybe you guys should come talk. And so I'm like, okay, then let's look at our portfolio, you know.
Mhm.
And that's when that whole millionaire thing came through. Just that we were looking at the portfolio, and I think we had like probably 17 properties at that time. And so it was just like $1.5 million in equity at that time. And so
Nice.
that's when Chai's like, oh, okay, you guys are a millionaire. I'm like, oh, yeah, we didn't realize that, you know. Uh, but that's just equity, you guys know that. So,
Yeah.
uh,
Yeah.
but I think what it was that very first deal, right? Because it was 850, we paid 24. We still made a little bit of money. I think we made like $300, and we're living in the property rent free, right?
Mhm.
So then all the money that I was making now, I essentially saved like 50% of that. So I could actually save money now, right? And then
Nice.
yeah, and then the money that my wife made, like she was able to save now as well. Um, and so when we start seeing that, oh, we could actually save money now, we
Mm.
could like we're making some money, you know, and then we could just continue this process, you know. And I was still stuck at that time too because I couldn't uh, do the I couldn't like you can't do 20% down, right? Because you're gonna run out of money very quickly.
Mhm.
So
Yep.
that goes to that Burr strategy, that whole Burr strategy. It's harder to do Burr now, but BRRRR. So like you buy the property, you rehab it, you rent it out, you refinance, and then you repeat that process, right? So that
Mhm.
you use it the same capital over and over. So I was very aggressive at that time to do that strategy, uh, just because we don't have capital, so we're reusing the capital that we have. Um, yeah, and so that's how we're able to do that. It's again, it's harder to do burn now, just because the interest rates are so high. But you know, it's if you find a good deal, it's still possible.
Yeah, definitely, definitely.
And
So
then I have to say
what year did you start?
that first deal that we did,
Yeah.
you know, we're essentially taking out $250,000 debt.
Mhm.
And I have to persuade my wife too, right? Because we
Yeah.
both of us haven't taken on any debt like that before,
Mhm.
and so
Yeah.
we didn't sleep for like weeks. We're so
Yeah.
worried about it. Just so you guys know, like this
Right.
mindset at that time,
Right.
Yeah.
like we already it's positive cash flow with $5,000 down, right? And then
Right.
we were still very like scared and like super stressed about it, and we didn't, we're scared to like we're like, oh, what happened? We can't pay that back and everything
Mhm.
like that. So we're going through all these emotions, and so I want to let your listeners know that that's normal, you know. So if you
Yeah.
guys you're doing the first deal, you go through all this emotion, yeah, that's normal. Okay. So
So how did you guys make that decision then? Like,
mentors, I call people I know. right? I'm like, hey, we're gonna do this. What do you guys think? Uh, just make sure you call people that are actually doing like what you want to do, right? So,
Mhm.
like, I have a cousin. Um, he's been in real estate for like 30 years, right? I call him. He's like, oh yeah, no brainer. But you call my mom's like, do it, like,
Yeah.
because my mom doesn't know investment. She doesn't know real estate.
Right,
So,
right.
like, if you want to get advice about real estate, go to see people that has done real estate. Like, don't go to like your
So
cousin that
true.
apparently knows everything but has never done real estate. Yeah,
That is a great tip right there. Yes.
yeah,
Talk to the people who are actually doing what you're trying to do. Don't take advice
yeah,
from those who aren't doing it. Okay.
yeah.
Okay. So what year did you start that first deal? How long ago was that?
So that's 2017. So
2017. So that's not even that long ago. Dude, that's like
nine,
what? 9 years.
yeah,
So you built all this up within pretty much 9 years.
yeah.
Looking back, does it feel slow or does it feel pretty quick?
Um, I it's pretty quick. Um, but I think like looking back, I think there are certain things that I could have slowed down on.
Hmm.
And I think that would have built a more solid foundation, for me to like like grow bigger at this point.
Hmm.
But it is what it is. You don't know until you actually do it. So,
Yeah. Yeah, so that's very interesting. So you started 2017 after the crash, right? The crash happened around 2007, 2008,
yeah,
and everybody was kind of saying like, "Oh, it's too late," or "I'm waiting for the next crash. I'm waiting for the next crash." But you didn't even
yeah,
care to wait. You just went, right?
yeah. Those because when I looked at the numbers, it makes sense. Like
Hmm.
back then, like you buy a duplex for 150, one unit pays for it already.
Hmm.
Like I wish we would have bought more at that time, right? But then, like, I think the 2019 and 20, the prices went pretty high at that time as well. But
Yeah.
I think because we're not buying new products. Like we're not buying like market, like we're investors, so we have to buy wholesale prices, right? Like
Hmm.
you don't start a clothing company and go buy it for $10 and sell it at $10. You got to go buy wholesale at $5 and sell at 10. So it's the
Hmm.
same thing. Yeah, we need to buy properties at like 40 to 60% off, and then put some add value to it and then sell it at the retail price. So I think it's that buying piece. You just buy it right. I remember like when COVID hit, we bought like 3 deals at that time. I got really good deals at that time because everybody was scared, you
Hmm.
know. And so I think if you just buy it right, you know, you just have to buy it right. Like that's what it is. Yeah.
Yeah, yeah. So let's talk about some strategy stuff. And we know we heard earlier you talk about the Burr method, right? That's something you did. You did seller financing for your first one. Any other strategies that you did along the way that kind of really helped you get where you're at?
Um, yeah. So it's all like I think being an investor, you have to use every single strategy, and then sometimes it's a combination of like all the strategies, right? Like one of my properties that performing really well, I think it's probably like my third property. Uh, and we were doing a flip at that time too. So like, we so I didn't have money at that time. Again, it's if you're in this field, you never have money. All your money is in like all your projects.
Hmm.
Um, but at that time, we there's a deal that was coming through. Um, for us to get it, they wanted a lot, right? So they wanted 115 or 120 or something, and the math says I could buy for like 190, oh, for 95 grand, right? And so I was like, oh, if I'm gonna buy it, I had to buy at 145. I mean, 95. So if you want 120, that's never gonna work. And so we had to be creative about that, right? And so then what we ended up doing was, this is what I talk about too. If you have a stubborn seller, right, and they want certain price because they have to, right, for one reason or another, you could give them the price, but you get the terms, you know. So like I gave her that price. I said, oh, I can't give you 120, but I can give you 115 as a preference, a principle to you, so that you kind of, not guarantee, but you get that preferred amount, right? But what I need from you is these are the terms now. Okay, so I need us to be partners. So you add me onto the deed, right? And then I will come up with all the money to fix it. And then after we finish it, since I'm on the deed, I'm gonna refinance. And then when I refinance, you quickly deed it all to just me, right? And then when I refinance, now I can pay you the 115 or more, right? So so see that's a strategy where now you're JV, you're joint venturing with that person, right? And it's instead of like just saying, hey, we can't do the deal because I'm at 95, you're at 115 or 120. Like we'll be able to joint venture. And so they just gave me the property. So essentially, I did not have to go borrow any money to purchase the property because she
Mm,
just gave me the property to fix.
nice.
So that was our term. So that's joint venture. And then at the same time, we need about 20,000 to fix it. I didn't have the 20,000. So I call my mentor, cousin, and he's like, yeah, you should put a investment package together. So I learned to put an investment package, what the deal is, what does it look like, what's the projection, how much money we're gonna make, when I refinance, how much money we will make, things like that. So I put that together and I sent it to a few people that I knew, to see if they wanna give me the 20 grand, right?
Hmm.
So then one of my buddies, he's like, yeah, I'll give you the 20,000. It was a 15% return for him, right? And it's
Nice.
backed by state, right? So so I got an investor involved that did, sort of private lending for me, or it's called gap lending, to cover that rehab cost, right? So
Nice.
see, we're doing joint venture, now we're doing private lending or gap lending, and then after that we refinance. So when we refinance, we use obviously my credit to refinance that, and so it's just like these multiple strategies that you could put together to make sure the deal works.
Nice.
Nice.
And then that one, since that one's matured, and I refinanced at 75% loan to value at that time, we have over 150,000 in equity for that property alone, at this point. And we're still making like $800 a month, uh, in terms of rent, right, for that. So that's a really
Like
good deal.
it,
It cost me nothing to go into that deal.
It's crazy.
nice.
So it's
Yeah,
a infinite return.
yeah, definitely. Yeah.
Yeah.
Nice, nice. Okay, cool, cool.
And then we have other deals. Like right now, we have a lot of sub two deals. If you guys are starting out, like you guys should be looking at sub two deals. My wife just purchased, like I told you guys, my wife just purchased a sub two deal for 6,000, right? And she's cash flowing like $400 a month. It's 6,000 all in. And she's getting a 3.125% interest rate, right? And then
Oh,
we just structured another deal for my brother-in-law. He's my partner in a lot of my projects. Um, and that property was on the market for such a long time. They couldn't sell it because the owner. So I'll describe this and I'll share with you guys how to look at substitute deals for the people that are listening.
hmm.
So they purchased this about 4 years back. The interest rate is at low interest rate, right? So I think they have 3.125 interest rate. Okay, they have to move, and they bought it for like 280 or something, 260. It and then they needed to sell for at least like 260, right? To just break even. But they put $30,000 to put a new roof in already, so they kind of want it at 300, just to
Hmm.
get like some of their money back. Um, and and so they try to sell it for 300, but it need new carpet, it need like stuff to freshen up, and they don't have the money to freshen everything up. So I told them like at 300, it is at 300 if you have new floor, right? Like
Mm.
you freshen up the place, and so they couldn't sell it. And
Hmm.
so if they can't sell it, then what can they do, right? Like they need to do a short sale, or they could do what we have here, which is a sub two. So essentially, we gave them 10,000. So instead of them getting zero, now they get at least 10 grand, right?
Mhm.
And then they just sign the property over to us, and
Mm,
then we just take over the payment. So my brother-in-law, I was gonna sell this out, but my brother-in-law didn't wanted it. So yeah, he's my partner, so it's fine. So yeah, they
Nice.
just put 10 grand in, and now they have a property with 3.25 interest rate.
mhm,
Uh, and they have I think 160 left that they have to pay. And then it's no like there's no credit or nothing, right? There's no
Mhm.
credit check. You don't have to get bank approval or anything like that. Right? So that's for $10,000. Right? And so
Yeah.
a lot of these deals exist right now, right? So for everybody that's listening, a lot of these types of deals exist right now because everybody purchased the property at low interest rate and they inflated that price at that time, right? When it was like the 2 and 3% interest, and even 4, they were able to afford a lot as a buyer. But the value of the property hasn't, if they try to sell right now, the value of the property hasn't caught up to that price that they
Mhm.
purchased. The value of the property actually came down, about 10%. So that if they were to sell it at even at the same price that they purchased it for, with all the agent fees and everything else, they're losing money. So
That's
why
true.
not? Yeah, why not just give them a little bit money and then you could take over their mortgage at like 3, 4% interest rate. You know,
Mhm.
like that. There's a premium for that. Like with interest rate high right now, you could, I'd rather pay 10 grand and get a 3.25% interest rate. So
Yeah,
right.
still
absolutely.
possible.
I
Get
think
the
that's a
low
great
interest
deal.
rate. Yeah, just about gotta be creative.
So
So,
what are you working on now nowadays? What's your goals
uh,
now?
uh, yeah, so now the Burr strategy it's more difficult to do that now. So
Mhm,
just so you guys know, I mean to be transparent with you guys, because I used to do a lot of like the refinance stuff all the time. That's kind of how we built our portfolio. We're shifting to like developments, so new construction. We still do some rehabs just to get cash, but we're shifting to new construction. So we're doing a few of those. So they have structure, duplex that we gotta try to build. So we're doing all the new construction stuff. Um, and and so I have partners and stuff with that already. And then yeah, then after that, obviously we want to build the larger units, right?
hmm,
So we're geared towards that development phase.
okay. Are these build to rent or build to resell or what are they?
It's built to sell.
Okay.
Yeah,
Okay.
yeah. Single family, we're still doing small stuff. So the single family built to sell at this point. I mean, a goal I have is with one of my partners too is all the lots that are free in St. Paul, we want to build all of them out. Yeah.
Okay. So you guys are doing infill lots, like the vacant lots,
Yep.
right? Okay.
Yeah.
Mhm, okay.
Nice.
But it's not as profitable as it was in the past, and so we have to be a little bit creative towards that. But
Mm,
once we able to structure that correctly, I like to do deal structure. So uh, once we're able to structure that correctly, where it will be more profitable for us too, um, we want to be able to build like one a month. So want to do like 12 a year. But at that time, it has to be more profitable. And there's ways to go around that with the city and everything like that. But
mm,
um, ultimately, we want to get to a place where we could build that type of volume. You know, and it's
got
still considered small because Lenards and all those big developers they build like 50,000 per year. So
yeah, yeah,
Yeah.
yeah. So how many have you built so far?
we done 3.
Three. Okay. Nice, nice.
Yeah, this year we gotta do probably 3 or 4 this year.
Okay. And what kind of price range are we talking about when you're selling these? Like, what are you building?
So it takes us about 300 to build, and then we sell it around 370, 390.
Hmm, hmm.
And
Okay.
these are four bed
So
to that.
so kind of like the starter home kind of, or
Yeah, so
yeah.
yeah,
Okay.
yeah.
Got it. How many square feet and all that?
2,000 square feet, 4 bed,
Oh,
2 baths. Yeah.
that's a good size. That's a good size
So
house. right?
Yeah, it's
Yeah.
still starter homes for St.
Right.
Paul area.
Right. Any plans to move up into the bigger, more
Yep,
expensive?
definitely.
Yeah.
Yeah, it's more profitable to build the 700 to
Mhm.
1.5 million dollar homes. That's
Right.
definitely a better sweet spot.
Hmm.
Um, but we're building towards that.
Yeah.
It's just also a goal of us to build in St. Paul, and so that's why I said we had to probably get creative with the city to
Got it.
make that worth it, for us to stay and
Mm.
build those.
Definitely.
Nice.
Okay. All right. So let's talk a little bit about I guess you had mentioned a little bit earlier about how you were kind of shocked that you actually had a net worth of over $1 million, right? I guess
Yeah.
what surprised you the most about that?
Um, I mean, it just that I don't know if it's surprising. It's just like we're just working, And so I think
Yeah.
just building that equity, you know, or like I guess Burr works, right? Where if you work at having equity in the homes, it works because it's also us building the equity, but also that appreciation
Yeah.
of those properties as well too that gave us that net worth, you know.
Right.
Yeah,
Right. So that is true that in real estate, why we invest in real estate, right, is because equity
yeah,
grows, right?
yeah,
And especially the one you started before COVID, right? 17, 18, right? You got
yeah.
in
Those
for a
are
good price.
yeah,
And then after COVID, right, we all know what happened to values, right? So it is kind of a shocker, right? Like, wow, okay.
yeah, yeah.
Uh, how has that changed your relationship with how you see money at all? Any way?
Uh, uh, not really. I mean, I didn't understand money at the beginning, right? So now we have to like really understand how money works. And so money is just like any other tools,
Hmm.
I think Sai Xiong talked about that. Sai Tao, sorry, talked about that at a few of the conferences. It's just another tool, like whether it's a hammer or
Hmm.
nails. So I'm looking at more at that frame. Okay, it's a tool that we're going to use to work on a project or something like that. So that's
Right.
sort of my relationship there. My wife doesn't like to spend a lot of money either, so we're still not like splurging on a bunch of things.
Mm.
Um,
So we
and
won't
so,
see we won't see you roll around on Lambo anytime soon.
oh nah, if you need it, just to rent it. You can just rent it for like
So
3 weeks,
true.
and
Yes,
then
yes.
after that, yeah, leave it. I
Right.
do like okay, like if we travel, I do look at some rental stuff. Like, oh, maybe
Mm.
I want to drive like a Tesla X or something, and then we'll
Mhm.
rent that, right?
Mhm.
So but you don't have to own it.
Yeah, that's smart. Yeah. Yeah. So we were talking a little bit earlier before the show about, net worth and all this. What do people most misunderstand about net worth?
Um, I, I don't know really. Um, I mean, to me, it's just the the value that you put in, you know,
Hmm.
like the um, yeah, like with all the rental stuff, right? It's like or all of our properties, like we're providing a service.
Hmm.
Like this is me getting to sort of the business side of things. But we're providing a service to them, and that equity piece that I have, it's sort of like a ticker that measures that, oh, hey, I provided sort of this amount of value to society, because I provide all these services. Like, we have 22 units, so that's like 22 families getting homes,
Hmm.
and that net worth is just a measurement of how much value I've been able to provide to society, you know.
Nice.
And same thing with the homes that we're building to sell, right? We're giving those, we're working really hard to provide a nice home for someone,
Hmm.
right? And that profit that we made, that's the sort of like counter or ticker that say, hey, you guys made X amount of contribution, to society. That's why you're getting that profit, So
Yeah.
I think network to me it's also all like it encompasses that, like how much value are you contributing back to society.
No, yeah, yeah. That's it's kind of one of the points that goes along with, right? Is that
Mhm.
it's not about making $1 million. It's about like if you can change 1 million lives, right? So
Yep.
Yeah, yeah.
yeah. What kind of advice would you have to younger people out there?
Um, well, just so you know, I'm using my phone, so I didn't bring a charger, but I think my phone's probably gonna die in like 5 minutes here. So
Okay,
I don't
we'll
know.
wrap it up. We'll wrap it up real quick here.
So in case it just like went silent, it's because my phone died. I should
Okay,
have brought it.
it's all good.
Uh, yeah, advice for young people. I think find uh like I never actually. I mean, well, obviously, just get started on the things that you guys want to do. Right?
Hmm.
Um, and you have to not be afraid to work hard. Like it doesn't matter what you do. Like just work hard. Like you have to work hard. You have time right now. You know, you're
Yeah.
young. You have time. You know,
Right.
so just like work hard.
Okay.
Um, and and then you have to have mentors, and you don't need to ask them to be your mentors, and they don't have to like you know formally be your mentors either. Like just look at ways to help people. You know, like if you just go help them, like go help them so much that they're like, oh, I have to give something back to you. You know, that should be where you're
So
at.
true.
You know,
Yeah.
like just
That's so good.
yeah, like just do that. Like keep helping them. They're like, oh, okay. That's how I got some of the other fourplex we got. Like I help one of
Right.
the mentor here. I helped him so much that he's like, oh, I have this fourplex. Like you guys
Nice.
want to take a shot of buying it, you know? So it's like that.
Yeah.
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 So
Yeah.
just go help guys. Go help
All right.
people. Yeah.
So we'll have Johnny wrap up here. Ask you the rapid fire questions real quick for your phone dies.
Yeah.
Yeah, so we
Yeah.
always have 4 questions that we ask everybody that comes on. The first one is, what do you think your ninja skill is, and what are you absolutely just best at?
Um, I think my ninja skill is like what I like to do, which is deal structure, you know. So like puzzling, like what pieces need to come together to make that deal work, you know. I like doing that, and I think I'm very quick at doing that. I think maybe the tech training that I have, maybe that helps because I could easily jump online, do my research, see what the best strategy is that will work because you guys know this real estate is such individualized to that
Mhm.
individual project that
Yep.
there's no one solution, so I like uh piecing the deal together and finding a solution to make it work and make it work for everybody.
Yeah.
So, how do you keep that ninja skill sharp?
You got to continue learning, man. Like because you might know all the strategy formally, but you don't know how those pieces come together unless you hear someone else talk about it. And then you're like, oh, you made that work for yours, like, oh, maybe it could work for this. So you have to
Mhm.
continue learning, and like for us, I'm in real estate, so you have to meet other real estate investors,
Mhm.
talk to see how they're doing at their projects. There's no real competition with each other. Like there's just so much work that needs to be done in real estate. Like just go outside, you see a house that's dirty, yeah, there's work that needs to be done,
Yep.
right?
Yep.
So like there's no competition. Like there's just so much work that needs to be done.
That's awesome,
So
man. I love that mindset. So what are like? I mean, we already covered a couple books that you had mentioned. One was Rich Dad Poor Dad. The other one was the Brandon Turner one, which was I can't remember what the title was. It was
and
um
buy real estate with little more no money down.
yeah, by
It's
real
a very
estate with.
long title. He loves long titles. So, like all his books have super long titles.
Okay, so those
Yeah,
two definitely change your mind. So those two are probably must reads for new investors, I take it.
yeah,
Okay, and
yeah.
then
Especially
the last question is, you're in St. Paul. What is your favorite or must try spot in the city of St. Paul for food?
oh, for food. Well, I'm a steak guy, so you know that best steak place on White Bear.
Uh-huh.
Yeah, yeah, that place is good. It burned down a while back, but they're back now. I think it's like Best Steakhouse or something like that. Like
Really?
best steak.
Okay.
Yeah, yeah. So you guys
I'll
could
have to
try
look
that.
that
It's very good for the price of that steak. Like
up. Okay.
like and stuff. That's that's non-Hmong. But for Hmong spots, I mean, not that you asked, but
Do we lose him?
I think so.
He's
I think
phone died.
he cut out.
all
His
right.
phone died.
Yeah, yeah, I think he's gone. All right.
We
Well,
used all of his phone
I know we used up all his
battery.
phone. Hopefully, he doesn't need his GPS to go home.
I know.
Oh well. Well,
Too good. Too good.
thank you too for joining us. Sorry we used up all your phone, but hopefully this episode was super helpful for anybody out there. Kind of like a behind the scenes, like how somebody started, relatively recent too, right? And
Yeah.
how they made it so quick. So that was a super cool conversation. And if you guys need to get a hold of Tou, we both know him personally. So if you
Mhm.
would like an introduction, reach out to us. We'll be happy to connect you. Do you have his school stuff or
Let me look it up. I know that he's in school. He's on Facebook. He's got emails. I don't have it. I think it's just school .com backslash Hmong. That's HMONG Wealth Builders. And if you type that in, you should be able to see his school account, right?
Hmm,
And of course, we'll throw it
the show notes?
in yeah, the show notes so that everybody can have it. In addition to that, if yeah, join his group. Like I think it's rather cheap, and it allows you to be able to gain so much information. He's got videos, he's got worksheets, they do a call every Monday, and so it's definitely worth the money. And go out there and support him, right? Tou is a super cool guy, been an investor for about 10 years now, and has established his wealth doing real estate. So if you want to learn from someone that accomplished it within a 10-year period, you know who to reach out to. So
Yeah, definitely. Yeah, no, I've only known Tou for a short period myself personally. I only talked to him a couple times, but no, he's definitely the real deal, right? Working out there, stacking his portfolio. I think what do you say? He's up to 20 something, right?
mhm.
Um, but yeah, I mean, this is one of those episodes where definitely most people who may not know him, they only see his like he's always on vacation, like he said, right? People always see him chilling by the pool, but he's earned it, right? He's earned it. He put in the work, him and his wife,
Yeah,
right?
yeah,
That's super cool to also hear that his wife is a big part of his success. She kind of pushed him to be where he's at, to get out of his comfort zone, right? From that corporate world to the entrepreneur world. And so, yeah, that's super awesome. But yeah, that's pretty much it for this show here. Next week, we will not be here. I have an event that I have to host. But we will return, and the following week after that, I think, is the last week of January here. So that wait, no, actually next week is the last week of January. So we will
yeah.
return in February. Yeah,
Wait,
we'll
hold
return.
on. No, we have a show on the 25th.
Uh,
Um, you might not be here,
I,
so
I won't be here, but
you're gonna have to give me access. We're gonna be doing a financial
all right,
advising show.
all right. Yep. Well, Johnny will be here hosting the financial advisor show, right? So Johnny, who are you gonna have here? You can drop a little
Uh,
promo.
I believe it is Fu, and he is a, financial advisor, providing financial advice for stocks, for your retirement portfolio, and so on. Like to give you different ideas of how to be able to save up that money, so that you can grow it, and when you're ready to retire, you can actually retire. So that is Fu Yang. He is a financial advisor. Don't miss next week, right? Don't miss next week. You guys want to attend so that you guys can hear how they do things, how they strategize, and how to even talk to one, right? Or where to get information from one. So you don't want to miss that. And then, of course, don't forget um, to always like, subscribe, and join us, and reach out if you have questions.
All right, we'll see you guys next time. Later.